Hi guys, hope you guys are good and welcome back to today's video where we'll be doing an end of week outlook video on the DXY as well as GBPUSD to get an understanding or an idea in terms of what we can anticipate in today's trading and as well as tomorrow's trading, right? And the reason why this video is very important as well is because it sets a tone for us into having to understand what we can anticipate in next week's trading as well. So if you guys happen to find the information shared in today's video valuable for you guys on YouTube, I'd appreciate it if you'd subscribe to my YouTube channel. I'd also appreciate it if you'd follow me on my TradingView profile as well. And the reason for that is because under my ideas section, you will see that I do release my day-to-day analysis, right? Or my ideas in terms of what I'm anticipating on that specific day, right? So I am a day trader, right? So for instance, if we look at yesterday's analysis, this was prior to the CPI release, where I was, looking at what we should expect in today's CPI release, right, which was yesterday, right? And of course, I was expecting a primarily a bullish move towards these buy stops over here, and we will go into why I was seeing this bullish move as we go into our analysis. And you'll see as well, I do use my TradingView profile as my journal, so you'll see exactly why I was seeing those the draw towards the upside. I explain that fervently over here, and as well as my outcome, right? So most of my analysis, you'll see my not just my analysis, you'll also see my outcome, the outcomes of my trades, right? Provided that I, took a trade or not. But with that being said, let's get into today's video. So this is the DXY daily time frame perspective. If we can just zoom out a bit, we understand that the daily time frame in terms of institutional order flow has been bullish, right? And I've spoken through many times how this is my long-term perspective over here, that's my intermediate term, and this is my short term over there, right? But we understand that's the long-term perspective because we're seeing how the daily time frame has been bullish, right? But with that being said, let's just zoom into current price action. We understand that this is our most recent low. That's our most recent high over there. So we'll mark our premium and discount tool, right? So we understand that for about 2 months, right? We've been looking at this price action. We've been stuck between that high and that low, right? And we see our price ended up getting into a deeper discount array or discount price, right? Where we completely mitigated this bullish order block over here. We filled the inefficiency being that fair value gap, and we are in discount prices, right? And we see how, price is being supported by this mitigation block over here as well, which is the weekly time frame institutional support zone, right? And off of this area, we can see how once these sell stops are taken, we see the market giving us a market structure shift over there, indicating the likelihood of price wanting to push towards the upside, right? So we are in discount prices, which is a point of fair value for smart money to look to, order pair against sell stops in order to accumulate long orders towards the upside, right? So we are at a point of fair value, right? It's good to be buying in deep discounts to be taking profits in premium prices, right? So if we understand that we have now established a low, right? And before just going through that, let's just further dissect the price action. We've taken these sell stops. We get the market structure shift over there. External range liquidity is taken, right? So we understand how the market moves. Once external range liquidity is taken, we'd like to see the market draw into internal range liquidity, right? Or we see the market drawing into this bullish fair value gap. We completely fill that fair value gap, right? And what makes this fair value gap very strong is because yesterday's news stepped in, resulted into this heavy draw towards the downside, and then we start to see this heavy rejection, right? Which closes right above the middle point of that fair value gap, which is the consequent encroachment, right? So that gives us an idea that bullishness is about to step into the market, right? That this fair value gap is strong, right? And then from this point, we'd like to see price draw from internal range price action and for it to reach into external range liquidity. So that's our next draw, right? But now looking at our premium and discount tool, if we've established that this is our intermediate term low, we then want to see price draw into premium prices because we're accumulating longs in heavy discount prices. So we'd like to see the market draw into premium prices where we'd look to then book against premium buy stops, right? So this area over here resides in premium prices. So at the moment, our short-term perspective is having to see price draw into that area over there. But with that being said, let's go on to our H4 time frame. Okay, cool. So we understand where our draw is on the daily time frame. Let's look at our draws on the H4 time frame, right? So we've already spoken through how we saw a heavy movement towards the upside, and this was the result of NFP, right, on Friday. And this resulted in having price having to push towards the upside, takes the buy stops over there, which is regarded as external range liquidity, takes these H4 buy stops as well. And those H4 buy stops are very important because they're residing in premium prices of this leg, right? Okay, cool. So once these premium prices or these buy stops were taken, this is regarded as external range liquidity. I was then looking forward to having to see price draw in towards internal range liquidity. So that's why yesterday on the DXY, I was seeing a draw towards the downside, and therefore on GBPUSD, I was seeing a bullish move towards the upside, right? But we'll further investigate that idea as to why did price have to draw all the way down here, right? So external range liquidity gets taken. That's our first observation. Price would have to draw into this daily fair value gap. Another thing as well, right? If you guys have done or gone through my fair value gap theory video, I will attach it to this video over here. And on my fair value gap theory video, I explained exactly how to choose fair value gaps, right? You want to look for inefficiencies in price. So the first thing you need to look into is understand exactly what is price doing overall. What is it doing? We can see here from this point towards the upside, we see that price has been buying. So now you want to see where are the last areas of price which were efficiently delivered, meaning where's the last area where price sold, right, against the buy side delivery. We understand that the way the market moves is it's always trying to reach efficiency, right? It's always trying to move efficiently, right? So the moment there are inefficiencies within the market, be it gaps, fair value gaps, liquidity voids, the market will always look to fill it, right? So we see here buy side delivery at this point, right? We see buy side stepped in and then sell side stepped in. So we understand everything that resides below this high over here has been efficiently delivered because both buy side and sell side was delivered, right? Then we see this heavy volatility towards the upside. This candle over here, firstly, this one had to set to high, then sell side had to be delivered, right? And for this low to have been established, sell side had to be delivered. So we understand that the gap between that point and that point is our inefficiency. That's our fair value gap, right? And of course, the way we mark it, of course, would be like this, right? But we understand, as long as we understand the logic that this is the area, this is the inefficiency that price has to fill. Another thing as well, here's another inefficiency in price that resulted from last week's trading with the NFP, right? We understand that this is the last balanced price range, meaning both buy side and sell side was efficiently delivered over here. This is the last point of efficiency. And now this is the last point where sell side starts to step in through these candles, right? Where you have these bullish that which results in this bullish order block. So we have the last point where sell side steps in through these candles within this balanced price range. And then Friday's candle steps in with heavy volatility towards the upside. So we move from balanced price action to inefficient balanced price action, right? And that itself results in a liquidity void. Once you have balanced price action, then you start to see heavy movement out of that point that results in a liquidity void. So you then want to see price eventually fill that inefficiency, right? So that's why yesterday's CPI release, I was anticipating price having to draw towards the downside because of all of these ideas, right? All of these narratives were basically giving me confluence for supporting the bearishness on the dollar, in which on GBPUSD I was looking to buy, right? Because they're inversely proportional. So after we've filled these inefficiencies, what is our next draw, right? So we understand that we may have established a low. But firstly, before we get into that, we understand that we move from premium prices over here into heavy discount prices, where we respected discount arrays, being the fair value gap was filled. We have this bullish, the H4 bullish order block, right? And off of this, and what is even more crazy is we understand CPI was completely against the dollar, right? Heavy movement towards the downside. Why is it that the moment we reach this objective and we fill these inefficiencies, that's where smart money starts to accumulate long orders in an area of fair value, right? And then what is our next objective? So we have an understanding that this low may have been established now, and our next draw would then be towards premium prices, right? Because we've looking to, price as accumulated in long orders in discount prices. It only makes sense for them to look to target, premium prices. So for me, in today's trading, in terms of the dollar overall, I'm anticipating bullishness, right? So we can see how multi-time frame analysis is starting to play. So we can see on the H4 time frame, we are seeing bullishness having to reach into premium prices, as well as the daily time frame. We're having to see bullishness having to reach into that point over there, and then the weekly time frame as well. We want to see bullishness as to reach into those premium buy stops, and then so forth as well on the monthly time frame. So that is my anticipation on the dollar overall, right? So we just need an overall understanding as to what are we seeing. Are we seeing bullishness or bearishness? So having to see bullishness, that can then give us an understanding that once we go into GBPUSD, if we're starting to see bearishness start to come into the market, then we understand that both the dollar and GBPUSD are, there's a cohesive relationship, right? Because if you're seeing bullishness on the dollar, therefore you should see bearishness on GBPUSD. And if GBPUSD is advocating for that idea, that gives us an understanding that our confluence is working, right? But with that being said, let's go on to GBPUSD. Okay, cool. So this is the daily time frame on GBPUSD. We understand that, to give you guys a bit of context, we understand that we had been bearish after these sell stops were taken. This is also a monthly fair value gap that was rebalanced, and then we started to see heavy movement towards the upside, right? Which resulted in the daily time frame having to draw into these heavy, you know, premium buy stops over there, right? And we understand the moment external range liquidity is taken, right? We're looking at recent price action now. The moment external range liquidity is taken, we'd then like to see the market draw into internal range liquidity. So if we've established that that is our high, then we'd like to see the market draw into discount prices, right? And what's resting in discount prices at the moment is this bullish fair value gap, right? But that's just, let's just confirm that narrative, right? So we understand this is yesterday's CPI news, which resulted in this heavy bullish movement towards the upside. Now, if you guys have, noticed that I look at engineered liquidity a lot, right? That concept, how smart money will tend to engineer liquidity almost all the time as to provide investments into the market. And what engineering liquidity is simply this: smart money, right? Because we understand they have the capital to hedge the market. As long as it's, you know, for their benefit, they'll do it. Look how at this point, price has established this nice resistance zone. We can see that it's been a perfect resistance zone this whole time. Smart money will look to resist this by, yeah, smart money will look to resist this point, right? As well, meaning they'll look to sell at this point as well, right? And by doing that, they are establishing this nice resistance point over here. Now, the engineering liquidity, how are they doing that? Because us retail traders, we'll look to sell this resistance point. And then what happens? Eventually, they'll put a buy order against all of this liquidity to absorb that liquidity. Now, the question is, why would they do that? When we're constantly selling this, our stop losses are at these highs, right? Those are the investments that they're looking for to sell against. Those stop losses reside as buy stops. So eventually, they'll put a buy order against their sell orders over here, put a buy order towards the upside, which will absorb all of these buy stops, right? And those buy stops will be used as willing buyers against their sell order. So we understand CPI was completely bad for the dollar. Why is it that we see heavy movement towards the upside, Only after these buy stops are taken, then we see rejection towards the downside. So it's clear the market is manipulated, you know, and it's very apparent. We see it all the time, right? And if we've now established that this is a high and we're starting to see sell side draw into the market, we understand that external range has been taken. The next draw should be towards internal range. And what's resting in internal range liquidity is we have this fair value gap, right? And I've been speaking through this fair value gap for quite some time, right? For the past few weeks. We understand, again, look through fair value gap theory. We understand this is overall bullish price action. This is the last point where sell side stepped into the market. So anything that's resting below this point has been efficiently delivered. We see buy side delivery, then we see sell side over there. Now there's a difference between this candle's low and that candle's high. That's an inefficiency being a fair value gap. So eventually we'd like to see price draw towards that as to fill this fair value gap. Doesn't have to fill the entire fair value gap, can just be that one over there, right? Another thing as well, just this red point. Hope that makes sense. But another thing as well, this is the last point where we saw balanced price range, a balanced price delivery, right? And then after that, we saw heavy movement towards the upside. That results in a liquidity void. So there's a likelihood that we may see price even further draw into this daily bullish order block, right? But yeah, with that being said, let's go into our lower time frames to get an idea as to what we can anticipate in today's trading. Another thing as well, we have these failure swings, right? We understand that there's a nice support over here. Sell stops rest below these lows. So those are proper investments for smart money to look to push towards the downside and absorb all of that liquidity. So we're seeing a lot of confluence for price having to push towards the downside. And that's good because on the DXY, we're seeing a lot of confluence for price to push towards the upside. So they are cohesively working together. So, that's a confluence of price action that's, high probability, right? But with that being said, let's go on to our lower time frames. Okay, cool. So we're on the H1 time frame. We understand these are those buy stops that we sold against. This is the CPI that stepped in as to take out those buy stops. So you have an idea as to why I was seeing buys yesterday, right? And now we start to see sell side step into the market, right? Now, if we're in deep premium prices and we're looking to sell, the target is discount prices. So in today's analysis, I'm looking to push price towards these discount prices over here. So that's my draw on liquidity. But with that being said, let's go into how I'm going to go about maneuvering the market, right? So what we're seeing heavy sell side towards the downside, and then what we see is a balanced price range over here, meaning efficiency. Then we start to see heavy, this candle push towards the downside. Now, fair value gap theory again. Look at this point. That's the last point. Buy side stepped in from this candle to that candle's high. That's the last point we saw buy side stepped in. The difference between these points are what? Our fair value gap. Now, look, price has filled that fair value gap. It doesn't have to, the way we market is like this, of course, but this is the fair value gap that price actually needs to fill. That's the inefficiency, right? So we filled this inefficiency, and yeah, if we can just go we'll go into the M15 time frame. This is the first thing that I want to see price do, and it has done that. And then the next thing is I'd like to see price draw into this area over here where we have our bearish order block, where I'll be looking to take a risk entry. So let me go into the 15 as to give you an idea as to why I'm looking forward to that. So an efficiency, that fair value gap currently been filled, right? I'll delete that, right? Why do I see price going into there? Because of the fact that we had a balanced price range. This is the last time we see bullishness step into the market, right? And then we saw heavy bearishness, right? Same thing, balanced price range, and then we saw heavy bearishness come into the market. So that's our inefficiency, right? That's a liquidity void. Same thing goes over here. These black candles, right? That's our liquidity void. So we'd like to see the market draw into that. And that's where I'll be looking to take a risk entry with my SL on that high, right? And then push to target 4%. I won't be targeting all of those sell stops down there. I just push to target 4% today and then I'm done, right? And then my second POI I'll be looking forward to is if price takes out those buy stops and then I'll look to sell against those buy stops. But with that being said, best regards, the architect.